It is believed to be one of the sectors that was badly hit by the domestic direction program, as well as the banking sector cleanup. But as the years roll on, how is this sector faring after all these development in our quest to encourage more persons to play in the investment, securities and capital markets place? Well, on PM Express Business Edition, I'm indeed grateful to engage the Director General of the Securities and Exchange Commission, Reverend Daniel Ogwamtete. Reverend, thank you for your time. It's been a long while. You've gone into hiding, some would say.
I'm right here.
And how are you doing, Reverend?
I'm doing well by God's grace.
The grace is sufficient.
Absolutely, absolutely. I mean, clearly there have been challenges within the space, but the wisdom of God, the grace of God, and of course the support of all the various stakeholders have come to play. And I can say that we are making good progress.
Talk about making good progress. How is the sector doing right now with all these development, direction program, banking sector cleanup, the challenges that the economy went through? Is it fair to ask you that in terms of gauging the health of the securities, then the capital market space, how is it doing now?
So, George, I can say that we are all witnessing a positive trend in the key macroeconomic indicators in terms of inflation easing, going down. The CD depreciation has been there, but it appears a bit moderate now. And I can say that if you look at the securities industry, essentially it's mirroring, the improvement in the macroeconomic framework. So let me give you a few examples. So if we take the Ghana Stock Exchange, the composite index, which basically measures the performance of the stock market, as at half year, I believe it was around 22%. But as at yesterday, when I checked, it was around 38%. And I can tell you that in local currency terms, it's the second best performing market in Africa from the data that I have seen.
What about when you do the dollar comparison?
So yes, the dollar comparison drops us, outside the top 10 in Africa. So that's why I said local currency performance. The market capitalization has also, been on an uptick. Again, as I checked yesterday, I believe it was in excess of 91 billion. So that's good. Then if we take the Ghana fixed income market, as at half year, value of trading has gone up over 40% compared to the same period last year, in excess of 70 billion. So again, that is an indication of an improvement. And when you take the funds management or the asset management space, again, we see the assets under management going up. I think the last time I checked, around 74 billion, which again is a significant growth over the same period last year. So if you look at all these indicators, you can see the market heading in the right direction. And as I said, we can say it's a reflection of the improvement in the macroeconomic indicators.
Can we say that the market is turning the corner, or it has turned the corner?
I would say the market is heading in the right direction.
The players are asking for that regulatory support based on what you said. Are you giving them this support or the required support as you try to aid in the recovery of this capital and securities market space and investment and all those things?
I believe you'll expect me to give a very positive response.
Of course.
So probably you can validate my response if you get a chance to engage the operators.
I'll definitely go out there and engage the players on this. But Reverend, this was a space where we're already struggling to encourage more persons to see investments as a critical tool when it comes to protecting their future and even developing the economy. And being very frank with me, Reverend, how did this domestic direction program, the banking sector cleanup, and even we had our own cleanup in this capital markets place, affect that takeoff that we were all looking forward to in this market space after years of work, your days in this space, even before coming to regulatory, our day-to-day engagement on radio, encouraging people that, listen, this is the place you have to be. How did these all externalities hold back this growth or takeoff that we're expecting this space to do?
So how I will look at it is that, all that happened really underscored the need for us to intensify our education. Because I've always maintained that a lot of the challenges, it comes down to education. Because, for instance, when someone is offering you very high returns, which are guaranteed, what it means is that there's risk because of the relationship between return and then risk. But people maybe lost sight, of that, or maybe they didn't even appreciate it fully. So for me, this all tells me that there's a lot of work we need to do with the education. Of course, there's also the angle of the supervision of the market operators to make sure that they are, going by the conduct standards expected of them, the need to segregate client funds from their own proprietary funds, the need to ensure the right corporate governance. And I can tell you that we have done quite a bit. We've run a number of training programs for the directing minds of the companies, the directors and then the chief executives and then the compliance officer, just to make sure that the right corporate governance is practiced. So for me, all that has happened has underscored the fact that there's more work to be done in terms of ensuring the kind of education campaign that must be sustained, not like a 9-day wonder, the need for the regulatory tools to be strengthened. And again, I can tell you that as a regulator, we are migrating from a compliance-based regulatory mode to the risk-based regulatory mode, just to make sure that we are more proactive in identifying, the flashpoints that may be appearing in the industry. And so I think it's a learning for all of us to do more in terms of investor education, supervision, and then creating the right, enabling framework that would allow the markets to continue to thrive.
But Doc, Reverend, some will say that if you leave the player on any day, they will do what they want to do. In terms of the compliance and the regulation and all the rest, what are you doing or what have you done to ensure that these players abide by the rules and the compliances? Because if you leave me as a player, Reverend, I'll come up with all sort of products and tools, and the players would always want to get ahead of the regulator. And how assertive is the regulator monitoring developments of the market to ensure that you stick to your license requirement or what you're supposed to do as a player?
Oh, very much so. And I think, again, if you get a chance to go out there, you can find out how the market perceives the SEC in these days. But let me give a few examples. So, for instance, we issued new licensing guidelines, which essentially brought to the fore the principle of being fit and proper, and to make the licensing process more rigorous, because the licensing is, if you like, the gatekeeper. If you make it loose, then all kinds of people would come in. So we have tightened it and made it a bit more rigorous, and to the extent that sometimes you find market operators saying that, hey, it's a bit onerous now, but we need to do it to make sure that we get only the right people in, and again, still using the licensing tool. If you persistently show that you're not fit and proper, then you also be ushered out in a very orderly manner. But the licensing guidelines is one. Then I can talk about the conduct of business guidelines, which has very strict requirements. For instance, the independence of the board, the composition of the board, the function of the board through committees, and so on and so forth. Just again to make sure that corporate governance is being upheld well, and we've been doing checks to monitor the compliance of the market operators to the conduct of business guidelines. Then I can also talk about the investment guidelines, which we also issued, which again gave some direction, for instance, when it comes to related party transactions, which was one of the bane, in the cleanup that we had to do. We've put in some restrictions. If you might, we've limited the percentage of assets and the money that you can commit to it, and even the process of approval is also been made tighter. So that also is something that we have introduced. And then I mentioned that we are migrating to the risk-based supervision framework, which will be more proactive in terms of picking out early warning signals about how the market operators are operating. And then, we also introduced the regulatory compliance portal, which allows the market operators to submit their returns electronically, which speeds up the process of analysis, and it spews out all kinds of information. So we have, and I can tell you that, in terms of enforcement, we have strengthened our enforcement. We developed an enforcement manual, and we've been doing it. And when people get letters from the SEC, they start shaking their pants. And so we know that one of the ways we can signal confidence to the market is when the regulator is strong in enforcement. I can tell you that if you take the Capital Market Master Plan, which we launched in 2020, it has 4 pillars. The 4th pillar has to do with improving enforcement, regulation, and market confidence. And we have done quite a bit, and we are still doing a number of things just to strengthen the regulator, strengthen enforcement, because we know it will trickle into an increase in market confidence.
Reverend, in your earlier submission, you spoke about the fact that you are working out to ensure that anybody who doesn't meet the requirement is ushered out. Do I get from you that you stand ready to crack the whip when you realize that Wiafe Securities and Co. is flouting the law, or one of those things where it will be a fine, and even that is kept under wrap because you don't want to rattle the market and all the rest? Do I get from that firm action from the regulator to deal with players who flout the laws and do things that affect confidence of the market?
So let me answer this way. The regulator has a number of tools in the regulatory toolkit, and so you deploy them in a graduated manner. So depending on the gravity of the issue and the risk that it poses to the entire market or the system, then you know what kind of toolkit to deploy. But we have the full range. Of course, the fines are there, or the penalties are there, and then there's the suspension, and of course the ultimate is the revocation. I think when in 2019 we did the revocation, what I tried to explain back in the day is that for a number of the firms, it took a bit of time because the regulator
didn't wake up one day and just
the regulator would want to give time for the operators to, as it were, correct whatever infractions they may have committed, because it's not at the first instance of an infraction that you pull the plug. So that's what I'm saying, that the toolkit is there, and you want to be proportionate in your action as a regulator. But you can have my firm assurance that if we need to pull the plug, we would.
And you definitely do that.
Yes.
This is PM Express Business Edition, engaging the Director General of the Securities and Exchange Commission on the market recovery in the midst of all these challenging times, and what is the regulator doing to enhance or promote confidence in the capital and security space with all these challenges around us as an economy, and how the recovery of the economy is also impacting on the market. This is PM Express Business Edition. Welcome back to PM Express Business Edition. Let's look at how do we restore market confidence amidst the economic challenges, and what is the regulator of the Securities and Capital Markets Space, the Securities and Exchange Commission, engaging the Director General, Reverend Daniel Ogbami Tete, and giving us the firm assurance of cracking the whip when it matters as well. In all these things, there is a layer of confidence as well in doing all these things. What are you also doing on the part of the regulator to ensure that that confidence is restored in the market? Because it's undeniable fact that the cleanup, the banking sector cleanup, the debt exchange program has taken away some level of confidence in the market, and even the mark-to-mark market development, and you help me out on that one, has seen people now opting for, okay, I think that the best form of investment, and I wouldn't encourage that, is to where people are taking their Ghana cedi and then changing into FX and all the rest. What are you doing in an attempt to crack the whip and all those things to send the signal that it is safe if a Kobnamansa in Makola has about 500,000 Ghana cedis? It's good to explore all the various investment instruments to place your funds.
What I would say is that we have, for I think the last 2-3 years, started a program that we call Time with the SEC, where we identify different segments, of the investing public. And what we try to do with those programs is to get them to understand, one, the securities industry, two, what the regulator does, the kind of tools that we have in our toolkit to ensure enforcement, and then also give them a better understanding of the workings of the market operators and then the market instrument. Because we believe that if people have the knowledge, then it will create a certain level of comfort. Because for all of us, I mean, where there are a lot of unknowns, you tend to be a bit unsettled. But where you have the knowledge, or you have a clear idea of how things work, it puts you at ease a bit. So that is one of the things that we have introduced, and we are taking it around the country. And I can tell you that in Tamale, in Kumasi, the sessions we had there were very, for me, eye-opening in terms of the appetite, because in both places where we expected a certain number of participants, we had in excess of 50%. So let's say we're expecting 1,000, and then you get about 1,500. That definitely showed to us that there is that hunger. And then once we engage, the feedback is very refreshing. The people get to understand. So we think that it's one of the tools that we'll continue to use just to get people to understand how the securities industry operates, how the regulator is positioned to execute this mandate, and what is to be expected of the different licenses that we have license. So that's one. Now, we have also been spending a good part of this year to develop what the marketing people call collateral, to push the investor education campaign on different platforms. The plan is to use, again, the markets we call above the line, below the line, channel, just to get the message across, to engage people. We want to demystify the capital market and then the securities industry. Once we're able to demystify it, then it makes people more comfortable, and then their behaviors are more informed. What we find is that people just rely on the say-so of maybe a friend or a relative, or so on and so forth, and that doesn't always lead to optimal outcomes. But once people are informed, so here in the SEC we say that an informed investor is a well-protected investor, and we think that once that we're able to successfully execute this time with the SEC on a continuing basis, and then the investor education campaign that we are about to roll out, and I think the rollout will be more from 2025 onwards. So we spent most of this year just developing the collateral. We think that it will help to demystify the market, and then also put to bed all the misconceptions that as it were is eating away from the confidence that people have in deploying their savings in the securities industry.
Reverend, how does this also dovetail into empowering the individual? They would not pass. There are all sort of so-called investment houses springing up, the online and all the rest, that I can know that when I'm dealing with XYZ security house, that house has been approved, vetted by the Securities and Exchange Commission to play in this space. How does this engagement dovetail into the individual empowerment, or should I go to your website to really see that these are the firms licensed by the Securities and Exchange Commission, so that I can, because all sort of investment schemes are springing up every day, especially the online platforms.
You're very right, George, and I would say that one of the mistakes you can make when it comes to money is to deal with an unlicensed operator.
How that person, whether that person's that firm is licensed or not licensed?
Yes, so thankfully we have our website that www.sec.com. Anyone can go there. There are a number of tabs that would show you the market operators that have been licensed. So if for nothing at all, just go to the SEC website and check whether this operator that has approached me to bring my money, my hard-earned savings, is that person licensed. If you're having difficulty, you can reach out to us. And I believe we have a toll-free number that I believe you can show on your screen, and for people to just call. But importantly, before you deal with someone, be sure that one, the operator is licensed. Then you can ask whether the product is also licensed or whether it requires licensing. But you can always check with the SEC. And like you said, there are so many, unfortunately, so many fraudulent schemes out there. And like you said, they are online.
As a regulator? We
are. And so we have set up a dedicated investigations team. And I can tell you that they have been monitoring the space. They have picked up quite a number, and they have reported them to some of the law enforcement agencies. So we have developed a collaboration with the law enforcement agencies, especially CID, IOCO, to help us to clamp down. Now, because some of these unlicensed operators use the internet or the electronic mode, we are also we're engaging the NCA and other players.
The platform. I mean, these things can be flagged on Facebook and all the rest.
Exactly. So we're just trying to use all means to clamp down on such people. We have come up with an initiative to create what we call the securities fraud committee that will bring all the players in the law enforcement and the regulators in the digital space, so that we can rely on each other to clamp down on the activities of these fraudsters who are just scamming people all over the place. So it is a headache, these unlicensed schemes, the money doubling schemes, all kinds of schemes that are out there, and so we will continue to do that. But clearly, there may be a limit to our coverage, our ability to really clamp down. So my recommendation that before you part with your hard-earned savings or money, please just find out, take the trouble to find out, is this entity licensed? If that entity is unlicensed, it's a red flag, and you have to be very careful. And I would also encourage that once you hear of someone offering some mouth-watering returns, why don't you just send us an email, info@sec.gov.gh, just to say that, SEC, I've heard about this and can you confirm whether its license is legit, or I think this is a scam, please take action. I can tell you that we do get these unsolicited mails from our
info. Have you taken action on
we do. So like I just said, we have to use the support of the other law enforcement agencies. So as soon as we pick up, we do our investigation, and then we pass it on. And Wiafe in particular, we have meetings from time to time just to look at the cases that we have referred and what they've been able to do. But these people are also very crafty, and they keep moving, changing their form. So I think that we are doing what we have to do. But like I said, please call the SEC, the toll-free number 0800100065. Let me repeat the number, 0800100065. That's our toll-free number. And then you can also send an email, info@sec.gov.gh, and our website, www.sec.gov.gh, and you can get all the information. Please do yourself that favor, just to check. It doesn't take a lot. Call, go to the website before you commit your funds. But we will continue to collaborate with all the law enforcement agencies to clamp down on these scammers who are out there, and we'll count on the support of all the various stakeholders who can help us ensure that. But of course, I can tell you that this problem is not unique to Ghana. Indeed, in almost every jurisdiction, including the very developed ones, you have these scammers. So it's all about how you, the investor, you can protect yourself by asking questions before you just part with your money. Because let me quickly add that even when the regulator is able to, or the law enforcement agents are able to apprehend these, bad nuts in the system, most of the time the money will be gone. So yes, they may be apprehended, maybe some action will be taken, but your money will be gone, and I don't think you want that.
Reverend, are the players getting ahead of the regulator? Because I understand your headache and your sleepless nights because of what is happening. At the end of the day, the back stops to the Securities and Exchange Commission with the calls and then the pressure, and even on the social media posts and all the rest. Do we get the sense that the players are moving way ahead of the regulator, or the regulator is now struggling to catch up?
No, so I think we have to distinguish between the licensed operators and then the unlicensed ones. I was dealing more with the unlicensed ones, but with the licensed operators, yes, ordinarily the market will be ahead of the regulator ordinarily, and the regulator will tend to play catch up. But I can tell you what we have done. So for instance, we introduced the regulatory sandbox license, which basically says that where we do not have regulations, or the regulations are not deep enough to support an innovative idea, we can take you through the regulatory sandbox, and then during the period while we are observing it, we can then work out the regulatory framework. So there is that provision. But I did mention to you that we have launched the Capital Market Master Plan, and the first pillar deals with improving the diversity of investment products and improving market liquidity. And for that, we have a working group, and the market players are on it. So in terms of bringing up ideas on what kind of products they want to bring to the market, that engagement is ongoing. And I can tell you that in recent times, this year alone, we have issued green bond guidelines. We have issued guidelines on crowdfunding. We have issued or approved commercial paper rules, for the market. We have worked on asset-backed securities yet to issue. We have worked on securities lending and borrowing guidelines yet to be issued. We have worked on market making, margin trading guidelines. So there's a lot that we are doing, and a lot of this, we involve the market operators. Those who have been licensed. So even though generally the regulator may lag the market, I think we are doing well to be in step with the market, and we are engaging them and pulling them along, allowing them, if you look at the working groups that we have set up under the Capital Market Master Plan, we allow the market operators to chair the working group, because we believe that that partnership I mentioned earlier is so important, and we need to get the market operators also, just being in the driving seat, where market development, coming up with products is concerned. So I think on that space, we are doing well not to lag. And like I said, we have the regulatory sandbox license facility as well. So I think for the licensed ones, we're trying.
What is the latest on, you mentioned a lot of products and others, cryptocurrency. What is the regulator's position now on cryptocurrency?
Right. So I think, was it in 2018 or 2019, one of the years, I can't remember now, we did issue a caution statement, if you like, to the market, saying that crypto assets are not regulated by the SEC, and so if you dabble in it, you are basically on your own. And that is our position. But I can tell you that even back in the day, we had an open mind. When I say we had an open mind, we basically had the posture that we need to learn. Because let me tell you, George, you can't regulate what you do not understand.
Okay.
So there's no point in trying to, pretend we have what it takes to regulate crypto, so we don't have the knowledge or the capacity to do so. So after issuing that statement, we have been taking steps to deepen our capacity, our ability to understand the space, so that then it can lead us to creating or crafting the right regulatory framework. And I can tell you also that we have been, we belong to IOSCO. IOSCO is the International Organization of Securities Commissions, and it's a global standard setting body for securities regulators like the SEC Ghana. And they have also been giving some guidance on this crypto space, what to do, because it's an evolving area. And I can tell you that all the different jurisdictions are at different levels trying to understand, learn, and then all of that. One of the common themes that IOSCO has recently outlined is that when it comes to the crypto space or virtual asset space or digital asset space, the key thing must be, we must see it as same activities, same risks, same regulatory outcomes. Okay, so same activities, same risks, same regulatory outcomes. So it means that, just as you will look at every other asset class and say that what are the activities, there are operators here, there's a need to have, let's say, a registry or depository for those assets, and then there are engagements with the investors who will patronize those assets. What are the risks that go with the different assets? What are the regulatory outcomes that the regulator must be interested in? So when we look at the crypto space, we are saying that same activities, same risks, and then same regulatory outcome. So for the regulator, if you are interested in protecting the integrity of the market, which is part of our mandate, you're interested in protecting the investors, which is part of our mandate, those are your regulatory outcomes. When it comes to the crypto space, you should achieve those same outcomes. What we have done is to set up a team. We call it a digital innovation team. And we've been engaging, they've been studying, engaging with different stakeholders. There are a number of the VASPs, they call them VASPs, that's virtual asset service providers, that we have been engaging with just to shore up our understanding and to help us navigate our way to craft, if you like, a regulatory framework, for the regulation of the digital asset. I'm aware that Bank of Ghana has recently issued an exposure draft, and if you got to look at it, they indicated working with the SEC because the crypto thing, in some instances it can appear as a means of payment. It can also appear as a security and so on and so forth. So we have that collaboration as well to make sure that for our side we have the framework to regulate it. We are not there yet, but we are on course. And that's why I said we have an open mind towards regulating crypto assets.
But some will say that hasn't it taken quite long because a lot of things are happening in that space that some will say that moving fast to take a position might help. I mean, a Forex operator was telling me that even some people are now trading Forex, are even buying Forex, and are even moving Forex market through these platforms, and an operator wait for legal and put their name out. It is happening. The reality is that they are playing in this space actively. Isn't it prudent on the part of the regulator to move fast and take a position on this space?
I think we are moving fast, but I guess it will be relative to how the market will see whether we are moving fast. I totally understand that there's a lot of, if you like, Ghanaians operating in that space. And indeed, when we came out with that statement maybe 4 or so years back, it was because we had picked up the intelligence that people were operating in that space. So we said, look, if you do it, you are on your own. And since then, we just embarked on a journey to understand and then put in place the right regulatory framework, to ensure regulation for that space. I think getting it right is better than getting it fast. So we are on course, I would say. And actually, I told you about USCO, and in our interaction with other jurisdictions,
it's the struggle.
Yes, everybody is just making sure, because it's an evolving area, and a lot of, in fact, some of the VASPs that we've dealt with, and they will tell us that they are already in that space. These are the virtual asset service providers, and they themselves will tell you that they see a lot of evolution. So maybe some might think that we are being slow, but I would say that we are being diligent to make sure that we come up with something that will make everybody sleep well at night, that you have a framework that has covered all the angles, because you bear in mind same activities, same risks, and then same regulatory outcomes.
The economists will say all other things being equal. When are we hoping that likely there'll be something in place in the next year, 2 years, 3 years, or maybe 10 years?
I wouldn't want to commit to a time frame, but let me just tell you that personally, I am eager to quickly come out with a regulatory framework. And why do I say that? Because early this year, when I got to know the number of Ghanaians that are already dabbling in the space, I realized that, well, it did. It did. I was surprised. So clearly, I am in a hurry, to make sure that we have it right. But of course, I also know that I need to get it right. As it is said, hasten slowly. So I'm eager to have the framework in place, and so I believe we'll be out in good time. We'll be out in good time. I mean, like I said, BOJ has already issued an exposure draft, and you can be sure that very soon we would also come out with a similar position, and then we would, depending on how things go, we will be able to, come out with that regulatory framework that will make all of us comfortable. The only thing is that I can't give you a time frame, but we are eager. Personally, I'm eager to have something in place.
Reverend, not encouraging those who want to move into this new area of investment tools that have not gotten the required regulation and then license and all the rest. But there's also a comparison often where people want to look at the license and the traditional product and the returns that is being offered to them. And sometimes they want to run into this space. There's always a bit about regulation that impacts on the level of returns people can offer. And I bring in the mark-to-market pricing, that what is the regulator doing to ensure that some of these licensed products and services really offer the maximum returns to investors, so that they are not encouraged to move into this space where they see very high returns and they are running, because there is always an element of regulation and how that influences what a firm can offer to me in terms of returns.
So what I can tell you, George, is that we have made it very clear to our operators that they cannot, underline the word cannot, offer guaranteed returns. If you do that, then you have a problem with the SEC, and we will have a problem with you, because the nature of every investment product has or entails an element of risk. What you need to do is to sell products. I say that we must move away from selling returns and sell products and sell investment solutions. And let me illustrate to you, George. So, and let me go back to my days of doing investor.
Yes, of course, we used to do way back those days, right?
Education. So, everyone should have, let's say, an emergency fund. Now, the object of an emergency fund is not to give you maximum returns. An emergency fund is to give you liquidity when you need it, because if you have an emergency, you should be able to access it. So you'll be told that keep your emergency funds in fixed income instruments. And typically, because your access should not be limited, you want immediate access, it means that the money must be readily available. It must be kept in near cash. So clearly you can't get a lot of returns on an emergency fund, because the purpose is not to maximize returns, but it's to give you liquidity when you need it. So what I expect is that the market operators in their engagement will let people understand that, for instance, if you are looking for to send money for your emergency or create an emergency fund, you can't expect high returns. But if, let's say, you are looking at your retirement, and let's say you are a young person, you are in your 20s, you are in your 30s, you have time on your side, so you can afford to take some more risk or take positions in long-dated vehicles or instruments. Okay, so then someone who has about 30 years, 40 years, 25 years to retirement, you can afford to go for longer dated, and even if you like, higher risk instruments. And the principle is that the higher the risk, the higher the return. So what we should be seeing is people educating the investors or the potential investors on the different products and how they behave, their return risk characteristics. And instead of selling returns, they must sell products, products that meet the needs of people. I like to call it what I call outcome-oriented investment. What outcome are you looking for? So emergency or education or retirement or lifestyle, different outcomes. And when you understand the dynamics of the different products in terms of their risk return characteristics, then that will inform what kind of product you go for if you want this fund or that fund. So I think that the focus must be selling products more than returns. I think that the mistake, and indeed what happened in the banking sector cleanup, which spilled over into our space, it was because people were chasing returns. Oh, this person can offer you better. Not remembering or not factoring in the fact that the higher the risk or the higher the return, the higher the risk. So I would urge people to move away from shopping for returns or selling returns, but rather focus on selling products. But clearly, from the SEC's viewpoint, you cannot. There's no way you can offer a guaranteed return to your investors. The law is very clear, and if we catch you you'll face the music.
What is the latest on the mark-to-market price issue? What is the latest in terms of the regulatory direction and the enforcement of that one?
Oh, since we issued it, it's still in force because we believe it's a fair way of valuing products. So the market operators are using it. There were a few challenges with the pricing, to use to do the mark to market because of the challenges with the Ghana fixed income, especially around the DDP time when trading was almost non-existent because people were either adopting the wait and see approach or not sure how things were going to pan out. So there was a bit of a challenge with the pricing, but that has been resolved because we've been engaging the market in arriving at a workable solution. So the mark to market is on, and as we said when we came out with that directive, it's not like it was just for a short period. That going forward, that's what we expect, so that people can see the difference between holding to maturity and then mark to market, and let that inform their decisions. If you need to take out your money and you understand that, well, mark to market, this is what you're going to get, because really when they go to the market to sell the security, the bond, this is what they're going to get, then you can be informed and we can say, well, okay, I'll still go ahead, or let me use another way of meeting my my need. So the mark to market, it continues. It's a valuation method that has come to stay.
This is PM Express Business Edition, engaging the Director General of the Securities and Exchange Commission. And how do we restore market confidence in these times and challenging times facing the economy, and ensure that indeed we see the market as an avenue to invest? My name is George. I'll be right back after this break. Welcome back to PM Express Business Edition, engaging the Director General of the Securities and Exchange Commission as to look at various developments in the market and how it has impacted on confidence, and ensuring that in the midst of a challenging economic environment, the capital and the securities market is still seen as an avenue to place your funds. Reverend, there's an element about meeting due date payments to persons who have invested, and also the banking sector cleanup and people having access to their funds. Let me first start with the institutions first. As we speak right now, do these institutions have access to their investment from banks that lost their license and all the challenges that they have to face?
Well, so if, let's say, there was a company that had invested with, let's say, one of the failed SDIs. Yes. After the revocation of the licenses by the Bank of Ghana, for instance, there was, as it were, a bailout. So customers would have been paid. But I am aware that in some instances, there were challenges with the validation of the claims by some of the entities, because especially maybe for the microfinance companies where records were not being kept properly, so the receiver probably had to be a back and forth manual validation and all of that. So I think there are some outstanding payments to be made to such claimants. So I believe it's a question of when money will be made available to sort them out. Then when I come to the firms in the securities industry, specifically the asset management companies that lost their licenses, again, some of the entities, institutions, had monies with some of these failed entities. Now the bailout hasn't been completed because, as we may have put out it several times, the estimated claims in our space is around 9.5 billion Ghana cedis, which includes some institutions, financial institutions, and then companies. Now, government has released so far 4.46 billion, and we have been promised 1.5 billion this year. That will bring the total to what, about 5.9 billion. So you will still have about 3.5 billion outstanding. So until all that money has been made available, what it would mean is that financial institutions or companies that had exposures with these firms will still have to be in a queue or in a waiting mode to receive those money. So that is what I can say about the failed financial institutions where government bailout has been a promise.
But Reverend, quick one, the 4.5 million has already been released to these firms, or it is still being held by SEC? Because there were some rumors in the past where they said that government has approved some monies, it's been advanced to the Discrimination Commission, and SEC was still sitting on the money and has not been advanced. I'll come to the individuals, but has that 4.5 million already been paid to these institutions?
So again, let me clarify. The 4.46 I talked about, it's not just to institutions, it's to all claimants, as in everyone who filed a claim, individuals, institutions, churches, hospitals, schools, all those, everybody who filed a claim. So provided that your claim was validated, and we had indicated the need for liquidation orders to be secured. So the 4.46 has actually been released. Government released it in the form of bonds, and people have been able to take out money. We had a formula. If you remember, we said it's either, if for institutions, I think we said 20% of your validated claim in tier 1 and the remainder in tier 2. For individuals, I think we said 70,000 or what was the percentage? I can't remember now. But I mean, that was a formula for the payout. So if you were an institution, and for instance, what was allocated was 20% of your examined or validated claim in the tier 1, you'd have been paid that, and then the remainder in tier 2. That if you were already in the full bailout. Full bailout is those that had the liquidation orders granted. Okay, so the 4.4 is not only for institutions, for all the claimants, and that has been released. We are expecting 1.5 billion.
That was recently announced by the Minister of Finance, and he said that 700 million of that has been released to Discrimination Commission, if I'm right.
So so I'll explain all of that. So the 1.5 billion is supposed to come in 3 tranches: 700 million, 400 million, and another 400 million, making the 1.5. It's supposed to be released. Let me explain that. The money doesn't come to the SEC. I think that is what people misconstrue it to be. What it is that a special purpose vehicle was created called the Ghana Amalgamated Mutual Fund. The idea at the time was that we wanted to create a mutual fund because indeed the investors had gone to invest their money with these fund management companies, and it so happened that they had collapsed. So we said create a vehicle so that their funds can still be managed. So there is that SPV, the Ghana Amalgamated Mutual Fund. So any release of bailout money goes into the amalgamated fund. Affected investors are expected to onboard, as in sign on to the government bailout, and then after signing on, accepting the government bailout, and after signing on, then they are onboarded to become clients or customers of the AM Fund, which is the special purpose vehicle that was created for the payout of the bailout in our space. So all the releases go to the fund, and then the fund will then make the payments as and when investors want to take money out. In other words, the amalgamated mutual fund is not a pay box, as in you're just going to take your money. They can manage it for you because maybe you are really setting aside that money for some future use. The fund management company you went to failed, but the government has given a bailout. It's in a mutual fund. It can be managed. If you want to take part or you want to leave it, I mean, no
Reverend,
problem.
someone say, I need my money. I'm cashed up. I need the money now. I
well,
don't want
so yes,
any mutual fund to invest that money for me, Reverend.
If you need your money, then you can access it. But I would explain,
Yeah.
you know, I mean, I'm just talking about the general structure. You know, so the idea is that, you know, if you need your money, you put in a redemption and then you take your money out from the amalgamated fund. And that is how it has worked with the 4.46 that I'm talking about. Now, I think I explained that the 4.46, the government released it in the form of bonds. Now for the tier 2, because at the time we created tier 1 and then tier 2, what we explained was that the tier 2 had limited access. The tier 1 had unlimited access in terms of people could either take part or all of their money out if they needed the money. They were cash strapped or whatever, they could take it. But for the tier 2, the arrangement then was that they could take it at various intervals. So at each anniversary of when you enter the fund, you can have X amount, 20%, because it had been structured for a 5-year period, that those who want to access it. Now, the issue is that if you are dealing with government bonds, and the question therefore is how you'll be able to you know, sell the bonds if you need the liquidity. I'm aware that you know, for the tier 2, access has been challenged because of the nature of the underlying asset. Okay, so that is, you know, maybe the only issue now. It's because government made the bailout or paid the bailout in the form of government bonds, and with the DDP, it's not the GIFM has come under, you know, a lot of, it's not, I think in my earlier comments I mentioned that we are seeing a rebound in the trading activity. So you know, there are still challenges if you have to sell the government bond. You can't sell, but it also means that if you are going to sell because of mark to market, you get a value lower than, you know, the hold to maturity value. You know, so those are all the dynamics. But to answer your question, the 4.46 has been released for all claimants who had accepted the bailout and then they had signed on to become investors or customers of the AM fund. So that is what has happen, and it includes institutions or firms.
The additional 1.5 that government has pledged them with the 700 that has been released to whatever institution is it, what is also the format for investors that want to draw down their, we speak right now. So if today Governor Mensah wants to draw down, he has about maybe 100,000 and wants to draw down, what is the modality for drawing down?
So the formula is the same, or the approach is the same. The money will be released to the AM fund. Okay. Now, I am aware that the AM fund, the managers of the AM fund will be holding an investors meeting in the coming days, and they will explain to the investors, because the money is going to be released in 3 tranches. They will let you know that in tranche 1, this is how much has been credited to your account. In tranche 2, this is how much will be credited to your account. Tier 3, how much will be credited to your account. Then you make the decision, when do I want to take the money out? Do I want to take it now? And then you engage them, and they'll let you know that, well, so there's cash up to this amount that you can take out. That's if you want to. But you can also leave it for us to manage. So I would say that investors should be on the watch out. They'll be getting SMS alerts that would invite them to a virtual meeting where the fund managers will go through the steps. I think there would be the need for some of them, for instance, to update their records with a Ghana card and so on and so forth. But let me not get into those details.
The understanding that it will be done in tranches by this AM fund to these individuals.
Absolutely.
And so not a one-off period if they want all their money now.
So that's what I'm saying, that what is going to happen is that the AM fund will communicate to all investors who are entitled to the bailout because they filed their claims and the claims have been validated. It will communicate to them that under this 1.5, tranche 1 is 700, tranche 2 is 400, tranche 3 is 400. Under tranche 1, based on your validated claim and the outstanding balance that you have, you can get X amount, or X amount to be credited to your account. Then, so at the outset, you get an idea of how much will be credited to your account in AM Fund in the 3 tranches. Then the second thing is, do I want to take my money out? And if you want to take your money out, AM Fund will again tell you that, okay, no problem, you fill a redemption form, they will let you know that you can take X out, and what you can't take out, they'll let you know. So that's it's a very simple thing, because the 1.5 is not the total amount needed to complete the payout. The 1.5, as I said, after the 1.5, we'll be left with about 3.5 billion Ghana cedis, which we hope that next year the government would, the proposal we have made is for a staggered payment because this year there's no space in the national budget to accommodate the extra. So certainly, let's finish the 1.5 this year, and the next year let's have the remainder. So this 1.5, you'll be made aware that this is how much out of your outstanding balance that will be credited to your account in the AM Fund. And then you will make the decision as to when you want to take some out, or whether you want to leave it for the fund managers to manage it for you.
So they should get in touch with their fund managers, their investment house, or even their bank and the payment institution. Because I remember that during the previous years, the GCB Capital played a critical role with the payments.
Yeah, GCB Capital is the lead manager of the AM Fund. So they would send out the SMS messages inviting investors to the investor meeting. Okay, so when you come to the investor meeting, then all the details they would go line by line. I'm just trying to give a very broad overview, but the AM Fund managers they would let all the claimants who will benefit from the bailout understand the different steps. But at the minimum, they will give you a view of how much out of your outstanding balance, because we are doing it on a pro rata basis, because so outstanding amount is 5 billion. We have 1.5. So everybody will get, if you do the math. Yeah. So,
but Reverend, I know you want to play and organize things as a regulator would do, but for that normal market woman out there, she just needs the money, and all these things are quite complicated for her.
Oh, they're not complicated. And indeed, I mean, the 4.46, we use the same approach. So I don't think, I think what people want to know is whether the money has landed or whether the money will land. And I think that is, for me, the most important thing, for government to release the money as promised.
And this will affect all the other category of investors who are their funds that have locked up, right? Including the pension funds or the pension bond holders and all those people who have been complaining in the past, right?
No, so I have to clarify. We are referring to all the investors who had monies with the failed fund management companies who filed claims. And their claims have been validated. So if you did not have money with any of the failed fund management companies, and therefore you didn't file any claim, but maybe today you have some issues with your fund manager, we are dealing with those who were affected by the revocation of licenses in 2019. So it is only the customers, individuals, institutions, including the financial institutions, of those failed fund management companies. They are the ones that we are talking about. So I just want to bring that clarity, because if we say all investors, I don't know what other investors may be, a problem they may be having as we speak. But we are dealing with those who were affected by the revocation of licenses and who went on to file claims and whose claims have been validated. Because this clarity is important, because there are some people who, for whatever reason, did not file claims. And we recently, if you monitored, we recently put out a notice giving a time for all those who are affected to file claims. Now that window has been closed. So even if you were a customer, but you missed the window of filing the claims, then, so it is all affected investors with the field management companies who filed claims, whose claims have been validated. Because again, we had some people who filed claims, but the claims were not validated because there was nothing to back it. So your claim must be validated, then you accept the government bailout, then you can be a beneficiary.
Reverend, this is a bailout. What does it also mean for the current quest to recover the funds from some of these firms that have lost their license or been shut down and all the rest? Does it put an end? Because I knew that there were still issues in court, registrar general, registrar companies working to get the funds of Black Shield and these other investment firms and mutual funds out there. What is the status of recovering some of these funds? Okay,
so again, it's a good question. Let me also explain so that people understand. So I think explained that in the SEC's approach to cleanup, we had to use the liquidation pathway. Now, the liquidation pathway requires the official liquidator to go to court for the court to grant the liquidation order. It is only after the liquidation order has been granted that the official liquidator, in this case, would now take over the assets and the liabilities. Now, what the official liquidator will do will be to recover the assets, get some proceeds from the assets, and then make payment to all creditors. Now, in our case, we were quite aware that liquidation process can be protracted, as demonstrated by the fact that we still have 2 outstanding liquidation orders to be granted. So
Black Shield.
Yes, Black Shield and Crown. So we engaged government and said that government, you know what, to help protect investors, integrity of the market confidence and all of that, can you come out with a bailout? So what has happened is that everyone who has signed on to the bailout has transferred their interests that they had with those fund managers that have failed to the government. So government now stands in their stead. So when the official liquidator is able to make recoveries, because ordinarily the recoveries would have been used to pay investors, but government has stepped in and saying that, okay, I'm releasing money to pay you the bailout. Now, what would therefore happen is that government has taken your place, so any recovery that the official liquidator will make, he has to pay government together with the other creditors. There's a certain waterfall that is used for that. But that's really how it happens. So, and I'm aware that the official liquidator through her agents are making some progress with some recoveries.
It's kept quite long, Reverend. It's kept quite long, some would say.
Well,
in reaching the finality and getting the assets that could have aided in the payment of everyone, you're left with a gap of 3.5 billion Ghana cedis.
Well, in the case of investors, I think they should be very happy that the government stepped in, because there's no guarantee
prompt payment of all the money. People are still struggling to get all their money.
Well, you see, there's no guarantee that the official liquidator will make any significant recoveries, to fully pay the creditors. So I think for the customers of these field management companies, they must be happy that the government has stepped in with the bailout. But I am aware that the official liquidator through her agents are working on recovery so that what government has spent, at least they can return some to government. But for the investors, once government has stepped in, you should be happy, because otherwise then one, you have to wait for the liquidator to recover, get some proceeds, and then pay creditors, and that wouldn't have been very pretty.
And you think that the process is moving fast to ensure that at least we're able to close the page on this issue?
Well, I think from the bailout would have loved it to be faster, but you remember that the condition that had been imposed was the liquidation order being granted. Now, Black Shield, as you are aware, you know, they were contesting the liquidation order in court, and at a point, government, through our recommendation, introduced a partial bailout on humanitarian grounds. And you find a lot of the customers have, over the period, been petitioning government that please, you know, look at our plight and let there be a release of the money, because we are suffering and all of that. And that is what has informed government coming up with this, you know, 1.5 and hopefully the subsequent 3.5. You know, so it's like government just looking at the side of what kind of support or cushion can be given the affected investors. But yes, the court case, you know, is what has, you know, caused the delay. But now government is saying, okay, you, because of your condition, let me still advance you the bailout. But if you recall, we stated clearly that government had given us two conditions: claims must be validated, liquidation order granted. But the liquidation order has become protracted because of those last two, and government is saying that, okay, well, let me still extend some support to the affected customers. So that is really the reason for the delay.
I mean, so Reverend, I mean, now, so far, any rough idea the number of firms that have lost their license? And also, let me ask you whether we are expecting any license in terms of products, schemes, and all the rest, companies coming back onto the market. We should expect that very soon. So first, the license withdrawal, and second, a bit of new licensing for listings and product services as well. Yeah,
so I think when we did the announcement, we said 53 firms. Then after that, 3 were taken off because they managed to make a case. So 50 firms had lost their licenses. That's in 2019. Now, between then and now, a few have done what we call voluntary cessation. So they come and say that for XYZ, I am no longer interested in operating in the industry. I don't remember the number of those who have come for voluntary cessation. Even I think yesterday or so, I even saw a memo of another firm that had come for voluntary cessation. So you will have those ones coming through. There's also the group that may have had their license, but maybe for a period of time they've not done anything with the license, because the act is clear that if you get a license within 6 months, you must have started operations. Failure which would lead to a revocation of the license. So we have those ones, but in terms of the enforcement action of revoking licenses, we haven't done any post the 2019 one. We did, but you know, trust me, the fact is the regulator would always monitor, and like I said, revocation is not the first step, but when you have been given opportunity to correct and you don't correct, we have to find an orderly way of getting you out of the market. So we are watching the space for those who may have issues yet to fully resolve. And when we are at the point where it's clear that this is the way forward, we would do that. I mean, we have some firms that are struggling to meet the minimum capital requirement. You know, there's a minimum capital requirement, and there are various proposals that they've brought, and including maybe looking at merging. You know, so we'll look at all of that. But our mandate is to ensure that we have people who are fit and proper operating in the securities industry. But earlier on, I mentioned that we had come up, I'm moving to your second question, we had come up with crowdfunding guidelines, which for me is very interesting, and then also green bond guidelines, I think, and then commercial paper. I think in these 3 areas, we should be seeing a lot of activity. We launched the REITs guidelines, I believe in 2019 or 2020, I can't remember now, And for a while, it was a bit slow, but there's been a lot of pickup. We have already licensed 2 REITs, and I think we have about 6 that we are processing. So we should see some more REITs coming to the market. And then the green bond guidelines, there's a lot of activity in that space, a lot of money because of all the conversation around sustainable finance and all of that. So we should expect to see some activity in the green bond space now that we have come up with the guidelines. The crowdfunding, again, we have licensed, I think, 1 or 2 operators. So again, we expect to see some activity in that space. And then also with the commercial paper segment that we have also approved, I believe that we'll see some activity. So I think there's a lot of excitement.
What about companies listed on the Ghana Stock Exchange?
Well, I am not in the place to mention
the names. Sorry, but 1 or 2 that
yeah. So my understanding is that we have a couple of potential SOEs that will be coming to the market. I'm not sure of the timing, but I understand some approvals have been given. I want to believe that the Ghana Stock Exchange will be making the announcement.
Not to mention the names, Reverend, but the first place they will come, the Securities and Exchange Commission. So
absolutely.
Just the number, or even private firms that are also almost through getting your approval before they go to the Ghana Stock Exchange.
So until they have come to the SEC, I can only talk about what we have heard, that there's a pipeline. Because we don't have, as we speak, equity listing applications at the SEC. I mean, we've done a few. We did. There was a cross listing. What's the name? Is that Santi Gold? I can't remember. Then there was the lithium, Atlantic Lithium.
Yeah, you're right.
So those we have already cleared. There are those that are also coming, issuing on the bond market.
Yeah.
But in terms of the equity listings, as far as I'm aware, we do not have applications we are processing at the moment. We just know that a couple of SOEs have been approved or earmarked for listing, and we look forward to the process because that would inject some excitement into the market, because the market is always looking at how do we have the investment universe broadened or diversified. So for me, we are looking forward to hearing, receiving the applications. We will do our work by reviewing them, and then hopefully we'll have the opportunity to launch those IPOs and get some more activity on the Ghana Stock Exchange.
It's been quite a long time since we had that buzz around IPOs on the market.
Yes.
In those days, we used to talk about the IPOs.
I know, right? I mean, I think it's something that we need to continue. I mean, we have our team, that's our issuers team, working with the Ghana Stock Exchange and trying to engage companies, local companies, and also some of the multinationals about coming to the market. For listings, it takes a while. You may have to do a lot of talking. They go through processes. Some they need to clean up their numbers and corporate governance issues so that they will be eligible. So it tends to be a long pipeline, but we'll get there.
Indeed, we'll get there. But I'll be coming back to you when you give the approvals and the names are out for them to go to the Ghana Stock Exchange.
You're welcome any day, anytime.
This has been PM Express Business Edition, engaging the Director General of the Securities and Exchange Commission on several developments in the market, and again, the assurance that they are going to do what they have to do to protect your investment, and again ensure that there is market confidence, and also ensure that your investments are protected. This has been PM Express Business Edition. My name is Wiafe. Have a great day.